Hi everyone, thank you for joining our first advice on Worksmith Live. It's an accounting edition. And for those who don't know Worksmith yet, we're a collaborative hub dedicated to helping grow the hospitality, food and beverage industry together. Right at the moment, it's really about keeping the hospitality industry together. We've created the Hospitality Industry COVID-19 Support Facebook group that you're looking at this webinar through, and that's really to help support the industry and for hospitality professionals to come together and discuss how they're dealing with the impact of COVID-19. A few days ago, we also released a free digital platform for the industry to connect to ensure easy access to relevant and up-to-date information, and we hope to support as many of those who've been affected in this difficult time. So this week we're launching a series of free online webinars covering different topics such as legal, accounting, health and wellbeing with different experts in their respective fields. And so for the next hour, we have an open discussion with an expert followed by a Q&A session for about 10 minutes. And so feel free to add your questions in the comments and the team at Worksmith will collaborate and collate them for that Q&A session. So now on to the expert for tonight. It's my pleasure to welcome Nadi Elias, CEO and founder of Equus Partners Accountants and Advisors, and also a Worksmith member, which is one of the original people. So it's really great to have Nadi on. Nadi is a serial entrepreneur, small business investor and growth accountant, specialising in working with coffee and cafe entrepreneurs, so hospitality small businesses. With years of experience advising small businesses, both locally and internationally, Nadi has created millions of dollars of profit and cash flow for his clients through directly helping them implement effective strategies to conquer the everyday business challenges. And Nadi is addicted to specialty coffee and businesses. So welcome, Nadi.
Thanks, Westy. Wow, what an intro! I'm just hearing that playback going. How much of that is really relevant today, and what can we really pick out of that? How it's the growth accountant. It's something that I'm really big on, but it seems to all be about survival these days. So it's funny how we're forced to simplify and bring things back to the basic concepts. But yeah, hopefully, I mean, look, first and foremost, well done to the Worksmith management team, yourself, Michael, Roscoe, for coming out and showing the initiative. And I think it's only testament to how much support you're providing out into the industry, where we're looking at 10,000 plus members for 2 weeks of running this group. I was trying to distance myself from Facebook for a while, but it looks like I've been dragged back in. But no thanks to your lovely group. But but well done. No, in all seriousness, well done to that. I think the industry is looking for leadership. They're looking for people that can decipher some of the noise, because there is a lot of noise. My God, there's a lot of noise at the moment. And hopefully we can do some of that today.
Yeah, that's right. So I think given that we've got a compressed time frame of an hour, let's jump in. And I guess we've collated some questions, and I guess the biggest ones come back to the stimulus packages that both the federal and the state government have announced over the past couple of weeks. And obviously it's sort of dribs and drabs, and some people get something in one and then they don't get something in another. And so it's really trying to unpack that. And I guess the format that I was thinking of handling this would be to talk about the federal stimulus packages, and then coming from the perspectives of both the employer and the employee. And so I think if we do it in that order, because we do have a mix of both hospitality business owners and their employees on our Facebook group and on the Facebook Live. So I think if we start off with the first question, which is really around unpacking, I guess, the three different stimulus packages. And so if we start with the first one, how does that affect the employer and how does that affect the employee?
Yeah, cool. So, well, what was it, a couple of weeks ago now, a bit more than a couple of weeks, that the government came out with what we thought back then was the big stimulus package, $17.6 billion, and there was quite a lot there, and it was kind of mixed between support for the individual, the employee that was affected by COVID-19, and a little bit of support to the businesses out there as well. And I kind of have to go back to thinking about what they actually did what was originally released, because it just seems like a long time ago. And obviously we've had a lot of stimulus since then. The main ones, I think, and I'll talk about it from a business perspective initially, is that cash boost, or boosting cash flows for employers, that came out. And what I kind of don't want to bang on too much about what it originally was, because that's now changed quite significantly. So originally there was a minimum of $2,000 of stimulus, if you like, or tax-free grant that the federal government was passing through to employers, predominantly through their BAS, their activity statement. So typically that quarterly or monthly lodgement that they've got to make. And that was based on the wages that they withheld from employees. That then quickly changed some 10 days later with an announcement that they would up that a lot. So it was from minimum of 2,000 all the way up to 25. And I mean, that then got jacked right up to a maximum of $100,000 and a minimum of $20,000. Now that's going to get also staged out over the next 6 months, if you like. So that's going to flow through the next 3 activity statements if you're lodging quarterly, or, you know, obviously every month from now until September.
Yeah, and just quickly on that, one of the questions that has come through is, so to get access to those, you do have to submit your quarterly or monthly activity statement. Otherwise, there's no way for the government to actually feed that money back.
Yeah, so the only way, and there's nothing to do other than lodge this activity statement. Now, most people on this call, and it may be mixed, probably lodge an activity statement through their accountant or their bookkeeper, even though it's very easy to basically shoot it across if you're using Xero or some sort of cloud accounting software like that. Most people do get their accountant to do it or bookkeeper to do it, which is totally cool. You know, but it needs to be lodged. So that's the only way that it's done. There's the form that's lodged. You're reporting how much wages you've paid. You're reporting how much tax on those wages you've withheld, and then that's calculated. Now, the tax office came out and said initially, yep, well, and this is being passed, by the way. So this law was passed very quickly a couple of Tuesdays ago, or last Tuesday, I think. And they basically said, all you need to do is lodge this activity statement. Now, the confusion's been around, well, how do I really get this money? And, you know, what if I don't pay any wages? Or what if I didn't pay any wages, but I work in my business? And a lot of people have been affected by that, especially my clients that are in the space of, they run their business through a trust, and their way of remuneration, the way they get paid, is through what we call a trust distribution at the end of the year. So a distribution of the profit. Now, unfortunately, in the eyes of the definition of this subsidy or this grant or this boost, is they're not actually getting a wage. They're not an employee of their own business. Unfortunately, again, is, you know, Australia's made up of these mum and dad kind of businesses that run through trusts. Like, it's been for a really long time the common way to run a business. It's for a majority of reasons, and it keeps costs down for businesses to run as well. But they've been caught out, unfortunately. And look, I'm been lobbying the government, been lobbying Treasury to try and get that sorted. And there's still a lack of clarity in that. I've heard some guidance from the ATO to say, look, you know, we're going to be watching if anyone does anything significantly different to what they've done before, meaning, you know, they all of a sudden put themselves on a wage or something like that. However, look, I can't provide specific advice to everyone on this call. I'd love to, but you're really going to have a good session with your accountant to understand what you can and can't do, because you do really need to, I guess, trust their advice and their judgment on this one as well, because you don't want anyone doing the wrong thing. My understanding with all this is the ATO are going to be really inundated of making sure everyone's done the right thing over the next few years, and they can do that. But one thing to note, this money is a tax-free grant. So anything that comes into your business as a payment of this PAYG, it's going to be tax-free. There's a couple of things to note and to break it down, because it is, you know, these are the questions that I've been dealing with over the last couple of weeks, and my phone's been running hot. Obviously, we run webinars and all that sort of stuff, but the goalposts seem to keep moving. It is a payment which is now dollar for dollar, basically, of what you withhold from your employee's wage. And you can be an employee of your own business, mind you. If you're a sole trader, you can't. But if you're, you know, any other sort of structured business, you typically can. What has been withheld on wages basically doesn't have to be paid to the ATO. So if you've withheld that, you've put it aside in another bank account, or you've just got it sitting there, it's basically your money to spend. There are some weird situations where people will lodge monthly activity statements because they're what they call large withholders. So they typically have a bigger employee headcount and hold more tax. Now, those ones typically have to withhold and lodge a monthly activity statement. So they would have already done a January and already done a February one. Now, it pays to note that this goes back to the start date on this is the 1st of January. So 1st of January, that's going to run all the way through to through June and basically be paid out through September. But basically, it's for this 6-month period of 1st of Jan through to 30th of June and what's been withheld. So most people are going to lodge an activity statement. The due date on that's the 28th of April. The tax officer said they're not going to even consider making any refunds to anyone until then. So don't worry if today's the first day of the new quarter and you've got to lodge today or you're penalised. And they're going to take 14 days to do that. So lay off your accountant if you're thinking that they're not doing the right thing by not lodging.
Yeah. I was just going to ask. It just popped in a question into my mind then that so we withhold tax from you as the employee.
Yep.
The government's now said to the business, we're going to give you that back.
Yep.
From an employee perspective, at the end of the financial year, does that still register as tax on their side for what they owe?
Yeah, definitely. So obviously there's a different system in which an employee's salary or their wage, their tax withheld on that wage and any allowances or deductions would get reported to the tax office. There's been a big migration to something called single touch payroll. And most businesses had to register for that back on the 1st of July last year. So, I know pretty much 99% of our clients have. And what single touch payroll is basically the way that allows businesses to report to the government every time they do a pay run. So every time someone's being paid through a business, if you're using Xero or a similar product, it's pretty seamless in doing it. Just click a button, all that information gets sent to the tax office. So the tax office knows at any point in time how much an employee's received in gross salary, tax, allowances, et cetera, et cetera. So they're able to, or you're able to, it's almost like as if they have an ongoing or a running pay slip of yours. So that information is being reported and there's nothing to worry about from the point of the employee in terms of, what if the business that we work for has failed? How does all that tax get reported? Hopefully if they've done the right thing, all that information is being reported to the tax office. But yeah, that's normally a year-end process as well, but it's really seamless now. So anyway, so this whole process, for people, it just pays to note, anyone on a monthly lodgement process, they are going to get 3 times what the PAYG withheld was on this March activity statement for them, because they've missed out on January and February, which is why the tax office tripled it. For anyone that has not withheld up to $10,000, they're going to get an immediate $10,000 in this activity statement. Now, the question might be, hey, I've only withheld $2,000 this quarter or this month. It's going to be under 10. Obviously, what's going to happen with that excess? So I've only withheld 2. The government's going to give me back 10. What happens with the other 8? The answer to that is that then gets applied to any GST that you own. So obviously in this activity statement, there's GST, there's pay-as-you-go withholding, sometimes installments. Now, if you end up calculating all of that and you're due a refund because the boost that you get exceeds the GST, well, then that's going to get refunded to you. Now, a couple of things here that we're seeking clarification from the ATO. They're saying that irrespective if you owe the tax office money, for other reasons, they're going to give you back that money. I don't seem to believe that. I want to believe that. I don't think that's true. I believe that anything that you're going to be entitled to as a refund, ultimately, if you owe the tax office some money, they're going to suck that up. And the government's really smart, aren't they? They give you the boost in one hand and they say, thanks very much for paying our debts. But look, let's see where that goes. We need more clarification on that. But I think if people bank on the positive for business owners is that any PAYG that you were withholding and hopefully doing the right thing and parking at the site. I know it's really hard to do that from a cash flow perspective, but you should be in preparation for your upcoming BAS. You get to push that back into the business to keep your employees, in a job or fund your business, to keep it going at least. Now, let's fast forward. Obviously, there were some other payments out there and some other incentives with respect to JobKeeper, and that was the big one that came out. Basically, JobKeeper replacing New Start. And New Start was, whether you want to call it the dole or whatever it is basically a payment to help people whilst they're finding work. It used to be $550. fortnight. That then got boosted to $1,100. And the government, whilst they're a bit laggy, brought down the barriers on how to being able to qualify to apply. So with respect to what your partner might own, what assets you have, and other income, basically saying that as long as you earn less than $1,075 a fortnight, you're eligible. So there was a big scramble, and we saw what happened with Centrelink and MyGov crashing, and I think that probably is what led to the JobKeeper payment, which we'll talk about in a second, no doubt. But look, there was obviously $750 of one-off checks being issued out to welfare recipients that was promised. I think that's going out end of March, into April. And look, I don't think anyone's received those yet, with another one coming at the end of June. But not everyone that got the 750 is going to get the second payment of 550, I think it is. They kind of really narrow down who gets that. And again, I mean, look, we want to be a bit high level in this, because otherwise we'll be here for a few days. But I think there's a lot of information out there on Centrelink's website or Services Australia or DHS that you can get some information on. But there is help and there is assistance out there. The other one, and it's quite contentious, is around superannuation and the government allowing people that have suffered a 20% drop in their income since January to basically apply to the tax office to have $10,000 paid out to them by their super funds, tax-free. Now, you can say that's a welcome thing. You can argue and say that's a way of the government trying to make us use up our super and not do anything else. But look, it's there for people that want to access it. To put it into perspective, normally you can never pull money out of super tax-free unless you're over 60 years old currently. So it may be the saving, the lifesaver for certain people. And I think everyone needs to think about it, talk to their advisors and see if it's the right thing to do. There's still not enough clarity on how to apply for it. It's opening up in April. You basically need to apply through the tax office, declare that your income's dropped 20% or your hours have dropped by 20% since the start of the year. And then that gets instructed to your super fund, and then they pay you out a $10,000 a transfer. And then again, you can do that again. I believe in July it opens up for a 6-month one. So there's two tranches of that, and you can get 20,000 basically tax-free. But in saying that, most people that want to access super, there are some rules, and there've been rules around financial hardship access to super. If you're ever in a position where you're suffering financial hardship, there's always been that ability to access super. Why I think the government has not been, commended on what they've done is that a lot of people don't know about the financial hardship access to super, number one. And the other thing they don't know is that even under financial hardship, you're typically taxed about 22% on what super you do pull out under financial hardship. So even if you got one foot in the financial grave, so to speak, and you want to access your super to bail your mortgage out or whatever it might be, they're still going to tax you on it. Whereas now with this $10,000, no tax, and that's not too bad. I mean, obviously there's a lot of discussion around, how much is this money really going to be worth in 10 years time? And could be worth hundreds of thousands of dollars if we just left it in super. Cool. I think the next round of stimulus basically, might convince people to leave their money into super. But I mean, look, I'm not a financial advisor. I don't want to tell you if it's the right or the wrong thing to do. But I think everyone needs to understand their own circumstances. And if it's the last line of survival, financial survival, then you might need to look at doing that. But I think that the government's making it quite easy with just a form to fill in with the ATO, and that's all online. So yeah, and look, that then brings us to JobKeeper. My God, JobKeeper. Let me put it into perspective. This is what my conversations with clients have been over the last 10 days. Or even less. On Friday, we're talking about stand downs. We're talking about how to approach it. We're talking about, keeping the business alive. And then, on Monday, Tuesday, we're now talking about how to get how to get everyone back up. And then now we're talking about, well, how do we keep everyone engaged and what do we get everyone to do when we've just been limited to takeaway or anything like that? And it's been really crazy in terms of where the discussion's gone. And I kind of put it like the pendulum has swung completely the other way. And now we're in, a completely different discussion. And it sucks. I mean, sucks as being an advisor or a business owner to plan around this stuff. But, here comes JobKeeper, right? And my take on it is that every business owner now that employs people is pretty much Centrelink. So you are now a subcontractor for Centrelink because what it was in the past was we were all tax collectors as business owners, but now we're a sub franchisee of Centrelink. So let's all be proud of that fact. But what's happened? I mean, my take on it is that the government's just realised that Centrelink's been really hard to access. They're conscious of the long lines outside of Centrelink because of people needing to prove their identity for the first time, things crashing and that sort of stuff. So they said, you know what, let's just give the money to, most of these people were employed. Most of these people were stood down because of the industry that they're in, retail, hospitality, travel, entertainment, for example. How about if we just give that money straight to the employees themselves and let them distribute it and become, a Centrelink franchisee? And that's essentially what's happened. So $1,100 is what you would have got on the JobKeeper. And mind you, you can still get JobKeeper. So for all those people that got JobKeeper, have lost their job, have lined up and gone through that rigmarole, can still stay on JobKeeper. But here's JobKeeper now. And what JobKeeper is basically allowing these employees that may have been stood down but not terminated to retain their job. And there's a bunch of different things that need to be ticked off in the form of eligibility, meaning they need to be employed as at the 1st of March, really important.
Can I jump in there with a question?
100%.
One of the wording that I saw in the, I guess it's not legislation yet, but in the announcement was that you had to have a contractual arrangement as at the 1st of March. Now, if you had signed a new employee due to start in March, and that was done in February, and then they were obviously going through their notice period, and then they'd come on board in March, but then obviously as this has happened mid-March, and as we've slowly shut down, do they still count, or do they have to be paid, officially starting from the 1st of March?
The word the government have used on the fact sheet is engaged. And I don't know, I'm tired of translations because it's just not clear. The thing is that we're going to find out one way or another. And I think that I know it's sucky to say that, we're going to find out one way or another, but we are. What's the definition of engage? And look, I've got all this stuff up in front of me because it's pretty important, but an eligible employee is someone that was, engaged as at 1st of March. You could have still been stood down and you're still engaged. You're just not terminated. So, I mean, providing that you'd signed a contract or, a tax file number declaration being sent to the ATO or something of that nature that, or obviously the easy ones that you've been paid before by the employer, they're all going to show that you're engaged. Obviously, if you've done a shift or anything like that, you're being engaged without doubt. So, I mean, if there's something to prove, there's not much clarity at the moment of what's the definition of someone that's been engaged. But I'd like to think that those bits of those steps would lead towards someone being engaged. It's going to be really interesting to understand how it's treated for people that were in between employment. But I think the government went back to the 1st of March because a lot of businesses hadn't have felt the effects at that point in time to that extent. So I don't know of any of my clients that were standing down employees or shutting operations or even thinking about it. They all thought it was kind of, whatever, China's copying it, Italy's copying it. It hadn't got to that extent. So I think if someone was employed at that point in time, and which is why probably the government have gone back that far, that sort of clears it up. There's a couple of things in that, and it really, in terms of who applies for this, and it's really at the employer level. So employees don't need to do anything from a JobKeeper point of view, other than talk to their employers to understand if they are going to be applied on behalf of. So, because there's one thing to note is you can't get JobKeeper from more than one place. So you can't get JobSeeker and JobKeeper, but you can get JobSeeker and then switch over to JobKeeper once that comes through. Hope that makes sense.
And as a sole trader, if you've got a side business, still you only get it from whichever you declare as your primary.
Correct. Business. Yeah. So if you've got a side hustle, I love that term. If you've got a side hustle and you can show a downturn of 30% your income year on year, or another method, you're able to basically register and you need to just keep declaring that your income has dropped. So the good thing is that JobKeeper has come out saying sole trader is going to be covered, so they don't need to line up at Centrelink, and I think it's a better way to do it. It pays to mention that JobKeeper is $1,500 a gross payment per fortnight, and a lot of people ask a million questions, so we'll see if they ask those, but I will try and clarify some of it. It's $1,500 per fortnight. Eligible employees, people that were employed as at or engaged as at the 1st of March this year, they have to be either full-time, part-time, or if they're casual, they need to have been employed by 12 months, for 12 months with that employer. If you're a casual and you've been employed by a number of different employers, hopefully, there's nothing on that one saying you can't get it, but you're not going to get it at all if you haven't been employed for more than 12 months or at least 12 months. So that's the tough one. That's the one that's going to hurt a lot of casuals, because obviously there's no choice in that. They either are eligible or they're not. And obviously if they're ineligible for the JobKeeper, they can stick with the JobSeeker, because they're totally covered for that. And I know that the federal government came out with the first round of stimulus saying, yep, 100%, this is more for casuals than anyone else. We know that you're going to get dropped immediately. We're going to lower the waiting times and that sort of stuff, and you're going to get it straight away. So I think this one's more for everyone else as well. But there are some issues, and a lot of people I know that were on Facebook sort of with a lot of questions and concerns about foreign employees, people on 457 visas, New Zealanders, for example. I think out of it, my understanding is people on 444 visas, so 444 visas, which are New Zealanders working in Australia, are the only ones that are covered that are foreigners. There are ones which are what they call special protected visas, or permanent residents are okay. I mean, I don't even know who someone on a special protected visa is. And I haven't gotten around to getting my migration knowledge up to scratch, but I don't believe that people on 457s are. And I know that a lot of restaurants in particular would bring in, kind of chefs that are 457 qualified or 457 eligible and here in Australia on those. So it does suck. It is a problem. I know some people are upset about it, but I think the government stance on that's to kind of look after the Aussies first, and look, does it help businesses as much? Not ones that have a big exposure to foreign employees, but it is there. So, look, full-time, full-time, part-time, in employment by as at the 1st of March, if they've been stood down, that's still okay, or rehired, that's still okay. Providing that we can show that they were employed at that point in time. Employer needs to register for it. At the moment, there's no registration other than a registration for information. And there's an ATO page on that. It's tiny. It just literally has a button. You put in a couple of details in over a couple of minutes, not even a minute, 30 seconds, name, ABN, etc., contact details. You then get a text message saying you'll get more information. So my advice to all employees out there is definitely register your interest. It's not a claim. It's not an application. It's just registering for more information. And that's a big one to do. You have to have shown that you've suffered. I'm assuming everyone on this call has a turnover of less than $1 billion. You have to show that you've suffered a 30% or more downturn in trading, so sales basically, year on year. So the current period, so January to March this year versus January to March last year, or March this year versus March last year, or you can show that that's happening. There's some specific rules for people, and the tax commissioner has will show some discretion, whatever that means. If you haven't been running for the full year, I know personally we've got clients that started up businesses last month, 2 months ago, signed leases and that whole thing. So it's look, talk to your accountant and get some clarity on that one. We're working with Treasury and the ATO on that one, but I think that'd be fine. It just obviously a bit harder to show the downturn. So you need to show that you've suffered a 30% loss or not. My advice is everyone just register. The issue with that is, so it starts effective 30th of March. So this pay week essentially. And it's $1,500 flat rate. Doesn't matter if you earned $200 a week or not. It's $1,500 per eligible employee per fortnight gross. So tax obviously gets withheld on that. For someone to put into perspective, it's about $1,300, $1,308, I think, after tax that you would get on that money. So still higher than the $1,100 you'd get tax-free from the government from New Start. Well, maybe tax-free, not always.
So is the expectation that you have to pay tax on that 1,500?
Yep, definitely.
Definitely?
Yep, without doubt. It's not tax-free money. Yeah. There will be, to an extent, superannuation paid on that as well, up to the wage that you are currently earning at the time from your employer. So what happens is, the way it's structured is the employer still needs to pay the wage, or at least up to $1,500 a fortnight to each employee. They can't pocket the difference. So if someone was on, $700 a fortnight, they then get bumped up to $1,500. And it doesn't matter if they're stood down, still at home. They don't have to be working to get that money. But obviously, it encourages businesses to do some really cool stuff around that as well. I'm obviously in discussion with a lot of my clients around how they can now launch projects that they've put on the back burner for a really long time, now that they've got this excess capacity. Because over the last couple of weeks, a lot of my clients stood down a lot of their employees. The owners got stuck into the business. Who was once a chef became a chef again. They were doing deliveries. They were doing whatever it took just to keep the business going. And now they can step back out of that, re-employ, get their employees back in, active, and also get them to work on projects that may be on the back burner, work on developing the back end of the business, a whole heap of stuff. And we can go into that because that's what I'm more passionate about. So it's allowed not only businesses to say, okay, let's hibernate if we need to and shut down completely, keep everyone paid and we're good. But hey, how about if we then use this time and our people to maybe expand their training, expand their exposure, really get the business ready for when things kind of clear up, and they will, but when, and come back bigger and stronger and appeal to, maybe a different market or a broader market. So, but anyway, $1,500, it does get taxed. It's per fortnight. The employer can't hang on to anything. So it's not an employer bonus. It's basically money that gets paid to the employer to subsidize what they're paying you. And they have to pass that on to everyone. If someone earns more than $1,500, so for example, someone might earn $2,000 normally a fortnight, it's up to the employer should they wish to top them up and pay that extra $500 in this case. And then again, it's up to the employer if they wish to pay superannuation on that extra $500 as well. But for the $1,500 that they would normally have gotten anyway out of $2,000, that's definitely what they're entitled to. So
that's the difference. That's the difference.
Yeah,
that's the difference between the first stimulus package and this third one, is that the refund of PAYG can be used by the business.
Yes.
For the business.
Yeah.
Whereas this JobKeeper payment is really about it's to support the employee.
Cool.
Yeah.
Excellent. Sophie, I think we can see your face. Lovely. So yeah, and look, it is quite confusing because people are like, oh, cool, do we still get the PAYG now? Because remember, PAYG is totally funded now. So you don't have to, you can hang on to the tax that gets withheld from employees. You can also, $1,500 a fortnight or $750 a week is subsidized by the government for them. And that doesn't matter if they're at home or in work. So that, I'm seeing that being very welcomed by business owners out there and people that, employees as well, because, they potentially don't have to line up and go through the crap that they have, other people have had to go to Centrelink. They don't have to potentially expose themselves to, contracting COVID-19 because, they're stuck in a line and they're out in the elements or outside of home and do all that sort of stuff. So that is positive. There's just there's a bit of lack of clarity around a couple of things at the moment. I got a curly question from a client just before we got on this call around, what if we've got someone who's on maternity leave at 1st of March? Like, are they otherwise engaged and they come back from maternity leave now? Like, what happens there? I don't know. Like, we don't know yet. We'll learn more. And this is the thing. This hasn't even been passed in Parliament as legislation yet. So, I don't doubt that it will be passed. I doubt that it won't be passed by both houses of Parliament, or at least both sides of politics, because I think they all want this. So let's act as if it is. A big one that I'm trying to get clarity from Treasury at the moment is, do you have to start paying from now, and do you have to start paying everyone $1,500 at least? The way I'm reading it is it's almost sort of pointing towards that. The only problem for business owners right now is they need to fund it through cash flow, because the payment from the government is not going to flow through until the first week of May, so that might mean the 7th. And obviously that's going to get backdated to March 30th. So it's a weird one. It's a tough one. There's some rules around superannuation, like I said. Who's entitled to super. There's different rules for people that are stood down and not having to come into work but still get the $1,500. There are people that are getting paid higher than $1,500, and what portions of what do you pay super on? But again, it's we're going to find out more information. And I think I'm sure government's kind of going pretty hard at trying to clarify it all and get it through Parliament. But it has come through. It's welcomed, but it's not the only form of stimulus out there as well. I know that you probably want to talk about some of the state concessions that have been going around.
Yeah, so I mean, that was one of the things I was going to ask as well, was around the Victorian and New South Wales governments have announced their economic support packages, designed to obviously get cash back into the businesses as well. And that was, I think, through GST refunds. And then I guess, the federal government obviously announced these things, and then the state governments have announced it. Can you access all of these different things? If you get one, does it restrict you from getting a state one, vice versa, or is it apply for everything?
Yeah. It's really interesting. So first thing to point out is whoever's in Victoria and operates in Victoria is kind of pretty lucky, because Victoria, and good on you, Dan Andrews, came out guns blazing and was one of the first to really put a good piece of stimulus out there. It was only 1.7 billion or something like that, but it was good. The immediate one was on payroll tax, and they basically said anyone that's paid payroll tax since July last year, you're going to get that as a refund. Now, for those that don't know, and a lot of people came to me going, are we going to get payroll tax back? So payroll tax is not PAYG. So payroll tax is the most stupidest tax in the world. I can't explain why we have payroll tax, but basically it's a state tax. Every state in Australia has a different rule on it, and it's based on a threshold. And once you exceed a threshold of how much you pay in wages and super and some other benefits to your employees, including to yourself, you get penalised. 4.85% in Victoria, and the threshold $650,000 a year. So that's $54,000 a month. Now, a lot of people, small and medium businesses or small businesses, micro, they won't get anywhere near that. But I've got clients there that are 20, 30 employees, they're triggering it, and they have paid payroll tax. It's paid monthly typically, and it's a tax on putting people in jobs, it's just crazy. Victoria came out and said, look, and rightfully so, Victoria's got the lowest threshold out of all the other states. So, like New South Wales, for example, $900,000 going up to $1 million threshold. Queensland's got $1 million. Tassie, something around that as well. Victoria came out the biggest and said, look, everyone's going to get a refund for whatever payroll tax they've paid since July, and it's waived for the next, 3 months. And on top of that, the first quarter of the 2021 financial year, so from July, will get deferred out into January 2021. So payroll tax, gone. And I had a client that received $40,000, from payroll tax that they'd paid since July. So bang, that's back in the bank account, and that's pretty good, because it really is a silly tax in my opinion. So that was a big one. The other one that the Victorian government came out with, which I like, is a $10,000 business support fund. Now, you asked the question, can you get both? Hell yeah, of course you can. So state and federal governments are in charge of their own kind of revenue generation. For all those that don't know, whatever GST is generated in a state, the federal government collects it through the ATO, but then passes it on to the states. All right, really simple. But the states do their own tax collection, right? They do their own tax collection because they're in charge of their own things, schools, etc., roads, schools. So they charge, their stamp duties and their tax, and they've got payroll tax and land tax and stamp duty on houses. So they're the key ones that they're in charge of. Now, with land tax, commercial properties that are worth less than $1 million, they're avoiding land tax on that. So they're discounting land tax. But the big one's the business support fund. And look, it pays to note, a lot of people are now going to understand about grants that are out there that are offered by the Victorian government that they never knew about before. But a big one is this business support fund, $10,000 flat rate. And that's for businesses that do not pay any payroll tax. So if your wage, if the wages and super and remuneration you pay to your employees is less than $650K a year, turnover more than $75,000 a year, you pay employees, and you've suffered a 20% downturn in your sales typically, which is, when you think about it, hospitality, retail, tourism, entertainment, and impacted equally almost around Australia. You basically register. It takes about less than 10 minutes. All you need to do is upload your most recently lodged activity statement, so your BAS, your business activity statement, and then that's $10,000. I haven't had anyone receive it yet because I'm assuming obviously it takes time to process and verify, but that's open. I think last time I looked at it, for another 63 days or 62 days. So there's still some time to get that through. So if you're worried that you haven't lodged the BAS before because you're new in business, well, you've got plenty of time to register for that $10,000. So the answer is, yeah, you can definitely get federal and state funding without doubt, because they both have their own jurisdictions for tax, and they're both offering different concessions for tax as well. So, your PAYG and that sort of thing, that's federal government. That funds the federal government to pour money into whatever they want to pour into. That's a federal responsibility. State government's got a state responsibility. They collect tax whichever way they do. And obviously they're issuing their own kind of stimulus. Look, the state government in Victoria talked about other things. For example, we'll hire people that lost their jobs and get them to do deliveries and all sorts of different things like that. But I think that's maybe now pushed to the side once this, because this JobKeeper initiative came out. Look, different governments have done different things. Tassie government's one to point out. So I've got a number of clients in Tasmania, and the government there has given everyone $750 to use, with an accountant and advisor, and it points plugging it, to get business continuity planning advice or cash flow planning advice. And I was, interested as to why all of a sudden my Tassie clients were interested in business continuity plan and some cash flow forecasting. And that's because they were getting $750 from the government to do so. There's been a ton of different grants coming out from the Tasmanian government. I love the Tassie government because they love hospitality. And they really, they've really got a big focus on food and beverage and hospitality and tourism. And they've really pushed a lot of money into it. If you're unsure, and you want to know what you're up for, the Premier of Tasmania website's got a lot of fact sheet stuff on that. Reach out to me. I mean, we've got clients in Tassie and all states in Australia. So being able to work with them on what they can claim and what they can't. I know there's a $2,500 grant in Tassie, that a cash grant that's also up for grabs there as well. Western Australian government, they've put freezes on various different things, household stuff. So they've gone a bit deeper with respect to helping people with utility bills and putting freezes on motor vehicle taxes and that kind of thing. So they're not bad. South Australian government came out with a kind of little baby version of the Victorian stimulus on payroll tax again and land tax. So they've been pretty good. No one's come out as hardcore as the Victorian government. New South Wales, what did they do? Look, interesting. They did a payroll tax deferral arrangement. So, I mean, look, it's not really a holiday on that, but is it a holiday? A deferment is, obviously you've got to pay it at some point. You're just not paying it now. In saying that, though, a lot of businesses, that they're on this call probably aren't paying in excess of, aren't paying $1 million or $900,000 a year in wages. Unlikely. They could, but unlikely. But look, that's there obviously as well. There's one thing to note that I didn't talk about in the first stimulus, and that was the apprentice stimulus. Or the apprentice support for apprentices and trainees, that's what it's called. And what the government came out and said is that if you had an apprentice or a trainee, and I know a lot of restaurants and that sort of stuff, even I've got cafe clients that have apprentices in the kitchen, or trainees, they will receive a pretty interesting grant or a subsidy. So basically 50% of the apprentice's gross wage will be subsidized for 9 months, providing that it is a bit grey in terms of if they're getting other types of grants and subsidies that they may be ineligible. But the way it goes is all the way from January through to the end of September this year. If someone was in place from the 1st of March, so you can't, if you hire an apprentice today for the first time that wasn't let go by anyone else, because there are some weird rules around that, you're going to get 50% of their gross salary subsidized and rebated back to you. It's interesting. I got a curly question again today from a client going, oh, well, do we get, how do we go? Do they get the JobKeeper? Do we then get 50% of that subsidized? Well, that's weird because they're getting the whole thing subsidized anyway. So let's find out more. How do you go about that? Look, to apply, they're saying they're going to open up the channels in April. That's got to be done through your Australian Apprentice Support Network. So whoever's hiring apprentices and trainees, there'll be a support network provider that you go through. You need to get on through them because they need to do the eligibility test for you and they need to apply on your behalf as well. So I'm kind of like one thing I can kind of not stress out about or have be the master of, but it pays to understand. So that's kind of really being pushed into on the back burner because, you know, it's like, oh, cool, apprentices, that sort of thing. But now there's so much more going on with JobKeeper.
So, and then with JobKeeper, just quickly, so we're waiting then for the governments, both houses, to actually pass the legislation to actually understand what, as a small business, what your obligation is in terms of paying, because essentially we don't actually know at this point because all you have to do is apply on the ATO. Yeah. We don't actually know if your business is eligible. Now, obviously, we can't offer strict advice because we're waiting on this as well, but most businesses should actually wait to determine if they're eligible and their employees are eligible, and then I guess once it's passed.
It's hard, Westy, to tell people go out and start paying everyone $1,500, and you know, we've given people the wrong advice. So yeah, that's the one piece of clarification that I need, and unfortunately I haven't got it yet. But it's a tough one. We'll see. Just remember, this came out 2 days ago, and it was leaked on Saturday night, and it shouldn't have been. So it's an interesting one. Let's see where it goes. But I think we can pretty much bank. Well, don't want to say that word, but we can kind of rely on the fact that this will pass because of the the commentary from I guess both sides of Parliament. And it'll go through. We know that it didn't take long for the first round of stimulus or second round to pass. That was really quick. Again, I think it'll go through fairly quickly and we'll get more clarification. The thing is, you know, just keep up to date. I'm sure a lot of people are putting stuff up on Facebook, of course, you know, just know what to look at and what not to look at. Don't be, you know, just be careful of the stuff that the media puts out because it does get sensationalized incredibly. You know, there's a lot of stuff that's being said that may or may not be true. Again, it's commentary. It's not the facts. Get the facts from the fact sheet. Talk to your accountant. They should be all over it or at least have some understanding. If they're not, then I'll let you decide if they're the right person for you. But yeah, you really need to, it needs to be unpacked and then it needs to be applied to your circumstances. Obviously, the problem is right now that we're in this information age and everyone wants real-time info. And it's very hard to get, well, it's easy to get real-time info. It's hard to get real-time info that's exact. And that's the problem that we're in right now. We're in this crazy space where it's like up to the minute, you know, because we need to plan for the next day. We need to plan for the next week. And it's hard if we're not getting it completely straight. But look, there's a lot of fact sheets out there. My advice to everyone is register. You know, look at what government grants you're up for. Look for, you know, and reach out. Again, look, we can open some channels in which people can reach out to me if they want. We can have a chat, or hopefully provide some more information. But look, you know, the forum's there to help people through Facebook, and a lot of a lot of stuff that I'm seeing is good. Try and get out of the blame game of governments and this and that. No, we're not covering off on everything. I do believe that there's quite a bit of stimulus out there. It's there. It's up for grabs. See what you can get and try and register for as much as you can.
Great. Yeah. I know we've got 10 minutes left, and so this is really that Q&A time. And so there's a couple of questions. One was, if an employer decides they have to close, so cash flow, they get the stimulus, but you know, there's at this point rent no decision has been made, I guess, on commercial leases, although there was talk that's going to the government for a chats this afternoon or tonight.
Yeah.
But at this point, you know, you might have to pay rent, so there's still an outflow and a cost associated. So if the employer does have to close after the JobKeeper payments start, so say in a couple of months, and they've obviously got employees that they've got, so they're actually putting those processed payments through, do they keep getting those from the employee? The employer?
It's based on the employer still employing the employees. How funny does that sound? So my understanding is that this is all, we talk about single touch payroll, STP, it gets reported to the government as to who's still getting a wage through STP. So if someone needs to close down, shut down, everyone stood down, let's not talk about liquidation for a moment, where a business actually goes into complete, kind of death mode. Providing that the employer is still paying employees, they will be subsidized by the government for the JobKeeper payment. And that, as my understanding is, will be required to be reported monthly by the employer. So, for example, you're being paid monthly, okay, you're still getting a fortnightly subsidy, but you're getting paid monthly. Your employer must declare to the government every month if you've been paid or not.
So does that mean every business would be going to monthly activity statements over this period rather than quarterly?
It's not going through activity statements.
Just the single touch payroll.
Single touch payroll. Yeah. So a push button thing every time pay run's done.
Yeah.
It's a good point. People can go on monthly if they want to. So the government has said that if you feel like you want to go monthly for GST, for example, because you might be getting refunds of rent and you've closed down and there's some stuff that you've still paid and you want a refund, you can do that. So you can call up the tax office and switch to monthly activity statement lodgement. It's neither here nor there for PAYG, but for GST, it might be in your favor to do so. However, just remember that if you choose to do that, if this all blows over, in 2 months, you need to then lodge monthly anyway. So for 12 months. So you can't get out of your choice within a 12-month period. So keep that in mind. How good is this? Yeah. So, but look, talking about rents and commercial renting, commercial rents and landlords, I've got so many different responses from clients as to what they're doing. We're going into bat for a number of clients. We've put together a really good letter that we're sending out to landlords on behalf of our clients directly to kind of really put a packet with a punch in terms of what's really going on for these people. And a lot of landlords are saying, yep, no worries. Here's a couple of months rent free, or here's 3 months of 50% rent. We don't want to lose you as a tenant, of course. It just comes down to having a real good negotiation, or just ask at least. The worst thing they can say is no. I've seen some really ridiculous responses, saying go and get your money from the government and that sort of stuff. Just people that don't get it. But look, we'll see. There's obviously this moratorium on evictions for 6 months, which means your landlord typically can't kick you out if you're in a retail kind of setting, commercially or you're residential. But it doesn't mean to use that and treat your landlord with contempt, because once this blows over, you're going to need a relationship with them. You're going to need to make sure that when you need them for something, whatever it might be, that's a major asset in your business, and that without a good lease or a good landlord or anything of that nature, when you go to sell or leave or transfer your lease, it can be really bad for you if you've been a bit bad about it and approached it the wrong way with your landlord. So keep in mind that human to human here. Don't think they owe you everything, and likewise for them. But yeah, there's a lot that can be done for any business. In saying that, it's a good segue to go. There's a lot that can be done for any business right now, whether you're getting government grants or not, to really dig deep into the financials of your business, into the forecasts of what's coming in, what's coming out, and really understanding if it's viable or not. So, now's the best time ever to really look at the numbers of your business and see, okay, well, is it still going to be worth it? Okay, wages are funded, great. Is it still worth it from every other aspect to keep going? Because that needs to be considered.
Yeah. There was a question, I know you touched on it before. Someone said, do you have to pay super on the 1,500? My understanding was that 1,500 has to be passed on to the employee. And then if you wished to add super on top of the 1,500, that was a business decision. But that 1,500 was just literally, as you said before, we're a Centrelink subsidiary, and we're literally just passing that payment on directly. And it was a choice of the employer.
Yeah, my understanding, and I'm reading from the fact sheet, and I can probably try and read verbatim. So we're talking about super, aren't we? If someone earns less than 1,500 a fortnight, obviously they're still entitled to 1,500 a fortnight. Cool, we're clear on that. So an employer has to pay them the 1,500. So if they're normally not getting 1,500, the employer has a choice in whether they need to pay super on the difference between the 1,500 and what they would normally have received as a wage. It's really weird to get the head around. So it's approached in two different ways. So if someone's been stood down but still getting the 1,500, so they're not actually coming in and working, the employer doesn't have to pay super on that 1,500 that they get every fortnight. But it's different. If someone earns $2,000 a fortnight, they're obviously getting subsidized 1,500. That first 1,500 needs to have super on it. Okay, as does the other 500 as part of the 2,000, because that's all part and parcel of that person's salary. If the employer still pays that top up and gets them up to $2,000. But if someone's not on the full 1,500 a fortnight, whatever they get to, I guess, replace their usual wage, that's got to have super on it. And then the employer has, it's with the employer to decide on whether they want to do the top up. So I'll try and find this thing from the fact sheet and I'll try and read it word for word. It's very hard, but that's all right. We can go to another question at the moment. Oh, here it is. Do you want me to read it out?
Yeah, that'd be great. Thank you.
Cool. Do you want me to read it as an example? I don't know. So anyway, there's someone here that has a couple of employees. It's a business that's affected by everything. It had a downturn of 30%. There's one employee that gets $3,000 a fortnight before tax and continues working for the business. There's another employee. So there's Anne that gets the 3,000, and there's Nick that gets $1,000 per fortnight. So less than the 1,500, and both continue working in the business. So there's eligibility for JobKeeper, and that's great. The employer passes all the tests for that, and notifies the employees that they're going to be getting JobKeeper for themselves, and then proceeds to pay. So the business will continue to pay Anne, which gets $3,000 a fortnight before tax. And the business will receive $1,500 a fortnight from the JobKeeper payment to subsidise the cost of Anne's salary. And will continue paying the super on Anne's income. So Anne still gets super on her $3,000. The business gets $1,500 of that $3,000 subsidised every month. Cool. Now, paste a note and say that the business is only going to get payment once a month in arrears. So for the previous month. So this May payment that's going to be paid out to employers is going to be for the April month, if you like. And then the payment in June will be for May. So the employer needs to essentially subsidize that. All right, let's get on to Nick. So Nick got less than 1,500. Nick only got $1,000 per fortnight before tax. So what's going to happen is Nick now gets an additional $500 fortnight before tax. So he gets bumped up to $1,500 a fortnight before tax. So the business receives $1,500 per fortnight before tax from JobKeeper, and that will subsidize the cost of Nick's salary. Now, the business must continue to pay super on the $1,000 per fortnight for Nick that he's earning, because he's still working in the business, remember. However, the business has the option of choosing to pay super on the additional $500 paid to Nick under the JobKeeper payment. Does that clarify it?
Yeah.
So this is from the fact sheet, and people can go to Treasury. I know on the group, tons of people have posted it up. They can go to the Treasury page, the JobKeeper payment, and you download it, and it's got that example there. So look, it took me a couple of times to read it to go, all right. But yeah, it's different treatment for people that earn less than 1,500 a fortnight, different treatment for people that earn more, different treatment for people that do not work, so do not continue to work. So people are stood down but still get the $1,500. My understanding is there's no superannuation requirement on that one.
That opens up an interesting question, because I mean, theoretically, you would have stood someone down because the restaurant has closed.
Yep.
But then, like you said, there could be projects that they've got to work on that you're like, well, you're getting paid for a couple of days a week now. Essentially, maybe on whatever wage you're on.
Yeah.
If you brought them back into work, then you would have to pay super. But if it was like, no, your role as it was, and there is no other work for you,
Yeah.
then you remain stood down, but we're just providing a channel for this Centrelink or this JobKeeper payment.
Yeah. Look, my personal take on that and the way I would approach it is, you've got to look at your roster, you've got to look at your team, who's capable of what, who's, and, kind of pick and choose, sadly, on, who's, I guess, you're going to be able to, move into a different role in the time being. Obviously, a chef gets to become a chef again and all that sort of stuff. But look, it's not uncommon, and there's no pride here. There's no time for pride. There's time for job security and, keeping the business going. And everyone needs to really be a team player, not thinking of themselves. And, if people need to be going from one particular set of duties to doing deliveries, well, so be it, right? Fair Work came out last week and basically created a flexible environment within the Hospitality Award and said, we're allowing complete flexibility of duties and job classifications. So because they know that it's all hands on deck and everyone needs to move in different roles to keep the business going. So just remember, we're doing all of this so that we get through it and there is a job to go back to and there is a business to go back to. And it's worth noting, because I haven't said it, that this JobKeeper payment will go for 6 months. But yeah, look, it's, if someone might only have 2 days of work at, well, $1,500 or whatever it might be, they need to be prepared to do that. I mean, as an employer, my thing would be to get everyone working, get everyone working at least for their $1,500 for more than, for plenty of reasons, and they can still work from home. I know there's a lot of things in gourmet travel, hospo can't work from home. You know what? I'll contest that. I reckon there's a lot of things that can be done from home. Obviously not cook, obviously not do a lot of that stuff and have a lot of interaction with customers, but there are a lot of things that can be done for the benefit of the business and the employee once this all kind of blows over, to allow the business to really think about how it can remodel itself. Because once we get out of this, I'm telling you that the way people consume and the way people deliver is going to change.
Yeah.
Because there's so much R&D going into the delivery of services and the consumption of services that, that's not going to be thrown out the door after this. That's only going to be elaborated on by the people that are in a really good position to capitalize on this stuff.
Yeah. It's just gone over 6, so I think we'll wrap it up there. Nadi, that's been fantastic. I guess the one thing I'd like to say is that we've got your contact details obviously at Worksmith, because you're a Worksmith member.
Yep.
And we can obviously put your details onto the Facebook group as
Yep.
part of the recording of this Worksmith Live accounting talk. Is there any information that you'd like to give just about obviously Equus partners, or are you just happy to leave it as the contact details on the Facebook group?
Oh, look, I mean, there are multiple ways that people that can reach out. I mean, obviously Facebook, there's a Nadi Elias page that people can like and follow, and there's a lot of updates that I'll post up there. Instagram, I'm very Nadi.Elias, very I love Instagram a little bit more than Facebook, but now we're all over it, and there's a lot of flow through. But no, look, Equus Partners, we've been going around for 11th year this year. Service clients Australia wide. Personally, I've got a big passion and a love for hospitality, especially coffee, and I'm fortunate enough to go around Australia working with a bunch of really great clients doing great stuff for their communities. And look, you see behind me, we grow. We're really focused on the growth of the business. It's a bit sad that we've had to focus on survival over the last month, but we do what we've got to do. So, I offer 15-minute free chats for people that want to sort of get in touch. There's a link in my bio on Instagram. I mean, if people want to reach out, look, feel free. If you feel like you're not getting, not getting clarity over certain things, or you want to have a chat about certain stuff, more than happy to have a chat and help out where possible. So, look, we love working with great people. It's as simple as that. So yeah, we want to see this. We want to see this industry. We want to see an industry that harnesses communities and is really, in my opinion, the focus center of an impact ripple that really positively impacts our nation. and our communities more than anything else. Like if we, I want to see us all come out of this, and the only way we are going to do it is really by focusing on survival and getting ourselves through this, and also getting ourselves ready for the opportunities that come off the back of this. Once we're all good, but obviously we've got to stay safe first. All starts with us.
Yeah, that's right. Thanks, Nadi. And thanks everyone for listening in. And obviously, Nadi's just given some information how you can get in contact after this if you are watching the recording or if you're watching it live. So thanks very much. This is the first installment, and we're looking to come back in a week to 2 weeks with another one, potentially a legal one. But we'll just sort of take it from what you guys post on the Facebook forum. And what's the most pressing questions that are coming through. So keep the discussion up on the forum, and we'll use that as a basis to get the next topic and conversation on Worksmith Live. Thanks for joining in.
Thank you. Thanks, Westy. Thanks, Worksmith. And thanks for everyone.